traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hey, I had a question come in from Dan, and I want to address it really quick. I wish I had him right here, but I don't. So Dan asked. He said this is his question. Blake, when we talk about fib levels, isn't the real reason why they tend to work is because everyone looks at them, not because they truly mean anything? Question mark. And when you were on the trading floor, did you chart fib levels and look at them the same way? Thanks. Let me answer your question about that. The answer to your question, in my opinion, is absolutely. I use them the same way that I do now. Even back when I traded on a floor, when we had no charting programs, and I actually had to draw out fib levels myself. I still have, and they're not in my office right now. I had them. I took them out for whatever reason. I'll have to show you. Maybe even later today, I can show them to you. Yeah, actually, if you're here on the Lunch Money webinar, I'll grab them for you. I use protractors. I actually had to print out. I used a program called TC2000, Telechart 2000, back in 1996, and I used to spend, like, literally, I mean, I'm not exaggerating, it was an hour and a half to 2.5 hours every night downloading charts, like, because it was over a telephone, modem. Downloading charts. I'd print out the ones that I liked. Excuse me, really quick. I'd print out the ones that I liked, and then is usually like a 4-hour daily and a weekly chart of, like, let's say I was looking at, like, Intel, right? And then from there, once I'd print them out, I'd use a protractors. All my protractors were preset to a 618, 38%, 786 fib retracements, and then I would take, the high, low, and then I would actually draw, what the support and resistance levels were based on fibs. See, a fib level, and the reason why they work so much, or they work so well, excuse me, these numerical numbers are in a part of everything that we do. The distance between, each break in your fingers, to the distance of your hand, of your palm, to the distance of your arm, to the distance of creases in a leaf in nature, to the distance of the full leaf, parameters. I mean, almost every thing in nature corresponds with a level. It's pretty wild, actually, when you really look into fibs. And so what that means is everything that we do, and everything that and how we think is really based on fibs into a mathematical calculation. So when I look at a chart, or I look at price, and I say, all right, well, and without even looking at charts, like, let's say if I'm just thinking about a price, and I go, okay, well, XYZ stock was at 100, and now that it's at, $50, it's half of its value. Even though a 50% is actually not a fib level, people still, relate it to as much, because a 50% is like, okay, it's half of its value, so I'm going to go ahead and buy it here. A 618 would be the most common, like, oh, it's gone more than half of its value, it's dropped more than half of its value, it's definitely a good value proposition at this point, so I'm buying here, or I'm selling there. 786 is, okay, it's not going to hit its lows, but it's so close that I'm going to start buying it here. So these different numbers, we all think about them the same way. Sorry, guys, I'm still spitting and sneezing and all sorts of stuff. I went to a holiday party that I shouldn't have gone to on Saturday night. That was really the biggest problem. But fib levels are really, it's just more of a natural inclination of price that you or I find as a value proposition. when something's moving. Are they more commonly used now? I think it's easier to find them now, but they still work just as effectively. And I've been using them since day one, or maybe like my first 6 months of trading. Right. So anyway, it was a good question. Thought I'd answer that for you. And all right, so we're going to go into charts, and let's go over. Somebody asked me where really key support for the S&P is. I would say it's right here. Okay, 1985 to 1990 on the S&P. That's the 38% retracement, somewhere around here. I mean, I know we spiked below a couple times. That's going to be really important support as far as I'm concerned. All right, so let's take a look at the euro dollar. And like I said, what I think we'll do today, and it'll give us something to do, you know, a little crazy. We're going to remove drawings for all symbols. It's all gone. Everything's gone. Now we get to start over again. All right, so let's go to the euro dollar. And so first and foremost, on the weekly chart, high, high, spike high. You know, this is a really strong trend, obviously, in the euro dollar. Okay, and if you look at the weekly charts and you look at, like, you know, longer term, going back to, you know, 2000, you can see how we are really just at some pretty key levels. Hold on one second. Sorry, guys. Okay. Like I said, I'm still not feeling 100%. Now, my wife actually, she thinks she's going to go back to the hospital, not the hospital, to the doctor this week. She still thinks she needs to get a chest x-ray. She's not feeling 100% either. It's kind of lingering, you know, if you will. All right, so you can see the 618 on a weekly or monthly basis, we're kind of hovering around. You know, we've been above it, below it, just kind of around it. And this actually gives you a really good, you know, idea of how important parity is. Should we make it down to there? And I believe we eventually will. It's just more of a matter of time, okay, before we make it down to parity. It's the 786 retracement. It's a round number. It's obviously going to be a huge level of contention. What I think we're developing here is what I think we're developing is, instead of a flag, which we had been looking at for so long, you know, being a flag pattern. It may still end up being a flag pattern, but what I think it is it's going to end up being a wedge, you know, that looks like this. So in other words, you know, any move up towards like 111 and change, we're going to find sellers. And even now, because it's going to take us a while to get to the trend line, if we end up bouncing around for the next couple of weeks, we're gonna you know, get stopped up when we get above like 110 up to 110.50. Because if you imagine, you know, longer term, let me grab a correct pen here. You know, we may bounce around for the next couple of weeks and then hit that resistance and then turn lower and be developing a, you know, a longer term wedge, and then, you know, eventually break down, especially if the wedge just, you know, if we can maintain that trend line. So what I'm trying to tell you is, any move up towards this trend line, you got to view it as more of an opportunity to sell, especially with the Fed raising rates and the ECB going the other direction. Now, where does that leave us today? Well, today this is where we're at. And to me, it doesn't seem like there's a whole lot to do while we're above 108. 108 is obviously really key support, and it doesn't take a rocket scientist to figure that one out. Okay, if you take the low to the most recent high, 50% retracement comes in right below that support. So this is going to be really key support, okay, for the market. You can see it all right through there. All right, it comes in just below 108, and that's going to be key, because if we break through it, that starts exposing the 618 and maybe even lower. So I don't know why I don't have the bias chart up, but we'll grab it. Support for the euro dollar will be 1.0800. It's really important support. And remember, looking at the chart that we have here, we can actually get below 108 by a few pips and not, when I say 108, doesn't mean we're going to hit it to the tip. That means that if we get to 108, we might get to 109.90, and you still at a 50% retracement. So it's right around here. It's that area that's going to be pretty key. All right. Now, last week, we were thinking, well, we might get a bounce back up to 109.25. At this point in time, if you're a euro bull, and you're stuck on the long side from last week somehow, you're probably just at this point just hoping we get back to 109 so you can do some selling. You can sell some of your position. So I think 109 is just going to offer us really good resistance today. If you want to be on the short side of the euro, 109 is probably not a bad place to consider it. Now, you'll notice that we have 108 and 109. We're right here, 108.60, right in between. This is a good day to really be particular about where you're going to enter. If you start shorting the euro dollar right now, you're probably just going to get stuck, getting flipped around. Or if you buy the euro dollar, you're probably just going to get stuck flipped around. There's no edge to being long or short the euro dollar at current levels. You get up to 109, it's probably not a bad place to be on the short side. That'll be your 38% retracement if we can make it up there. Support 108. Okay, and that's it. All right, let's take a look at the cable. All right, so here's the pound dollar, and the pound is weak, and we had drawn out, for the last several weeks now, we had drawn out something that looks like this. Looks like this descending wedge, if you will. And that's been holding us up pretty darn good, all right? Now, if you go back out to the daily chart, go from the low to the high, we have the 786 retracement that came in at 148.55, and it's, we're measuring it at 48, but it's like basically right there. That's your 786 retracement. That's really key support at the moment. Now, your natural inclination would be, well, why don't we just get long here and put stops below this trend line? You could do that, okay, if you want. But fading the dollar is a difficult proposition, I think, for a lot of people at the moment. So, that's great support down here at 148. Let's just call it 148.60. My assumption is a lot of people have been trying to buy down here over the course of the last couple of days, and they're all wondering the same thing. Well, Jesus, this thing's not bouncing. I've been buying it down here for the last couple of days, and you would think that we would have had a decent bounce by now, but we haven't seen it. So, if we do start bouncing, this will be right here. This is what clears us up. So if you want to take the downside pressure off the cable, we really have to break above that spike right there, which is 149.50. So if we break above 149.50, that if you're on the long side, then you'll know you're in good shape. You might be able to make it up towards 151 if we can. Okay, 149.50, that is resistance. All right, let's go take a look at the Swissy. All right, so here's the Swissy. Now, the daily chart, this is, this has been, well, let's actually go out even to the weekly chart. So if you look back into the 90s, first and foremost, you got a couple trend lines. You got this one. Okay, so you can see breakout basically retested the trend line, right? I mean, that's where we're currently at. You guys know my most basic of basic trade strategies is trading a trend line break and then buying the retest. Well, many of you were with me. There's a weekly chart. When we bought the breakout here, made some really good money on the upside. Most of you know that I'm already long the dollar Swiss. Now, my cost average is not as good as it was a couple of like a week ago, because what I did is I bought it down here at like 98.50, but I bought it a couple of different places. So when I sold half of it on Friday, my cost average is now at 99.17. I'm only up 22 pips because remember, we do FIFO. If you use a U.S. broker, so I bought it at 98.50, bought some more at 98.70, bought some more at where we're currently at 99, 20 or whatever. 99.17 is my cost average now. So when I sold half of my position on Friday, my cost average is higher because it took my initial trades, took the ones that I bought earlier. So, but I am playing the trend line retest. Okay, trend line break, trend line retest, and I'm already long some Swissy, half size position. I wouldn't mind adding, but I have not added yet though. Okay, here's the daily chart. And actually, let's go back to the weekly chart really quick. I want to do one last thing. So on the weekly chart, another thing you can look at here is from this high. You can look at it something like that. We finally broke out and we're retesting that one as well. So bottom line is with the Swissy, as long as we stay above like 97.50, I know it's 200 pips away from where we're currently at, but 97.50 or so, it's just retesting these broken trend lines. So, anywhere down here would be great to be on the long side. I just don't know if we're going to get that opportunity. Now, if you go out to the daily chart, you go from the low right here, the trend low, to the high. The 618 held us all the last couple of weeks. We knew how important that 98 cent level is. Huge, right? Now, I think we're capped between two places. The 99 cent level, which is support. Okay. So if you want to buy the Swissy, 99 cents is probably the place to do it. Okay. Resistance is at parity. That's also a 38% retracement. Is parity right through here. So 99 cents and parity. I mean, obviously, if you want to be on the short side, you just do it up there, and if you want to be on the long side, you buy it down at 99 cents. Okay. Okay. So 99 cents and parity. Now let's go take a look at the dollar yen. So the dollar yen, the dollar yen, I had it actually drawn quite nicely, and I'll have to draw it again. Okay. So here's the dollar yen. This is a weekly chart. I think we had the dollar yen drawn some that looked just like this, right? Something like that. Let's go over to the daily chart. Yeah. So we had noted how, support, support, support. You can see how important this trend line is, right? Super important trend line. Bam, 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 bam. Okay. Now, all big rejection areas. Also, some people are looking at it like this. Shoulder, head, shoulder. It's possible. It's not the best looking head and shoulder in the world for a complex, but it's there. What we've been monitoring is this. This is our alarm. That's an alarm that's still set. Okay. That support comes in at 120, whatever the low is here, 120.30. All right. Low to high. 618 comes in at 120.25. Okay, which is also coincides with that spike low. So that tells you how important that support is, in the future, should we get down there. Now the BOJ's inaction last week really put the yen in demand. Low high, 786 retracement, 121, very important support today. Okay, resistance. Now, one of the things that you may not have noticed, but I want to make sure that you do pay attention to, is that we have rallied 150 points in the Dow futures overnight. Well, now we're only up 107 points. We rallied like 150 points in the Dow futures, and the dollar yen has hardly moved. Okay. I mean, it may be up, it was up like 15 pips. Now it's only up like, well, it's up 24 pips, I'm sorry. Barely moved based on, how aggressively the equity futures have bounced back. So with that being said, resistance is probably not too far away. The spike high here probably will matter. That high is 121.75. So I'm going to write down 121.75 if we can even get there, and we are in a range. Okay, so when I get back from break, we'll do the Canadian, the Aussie, the Kiwi, dollar index, peso. We're going to take our time this morning. We have plenty of time to do all this because there's not a whole lot happening in the markets right now. All right, I'll be back in a few minutes, everybody. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back, and we're going to continue on with our analysis. And, I have to say, frankly, there's a lot more people listening today than I had thought would be listening in. This is probably just looking. I've been broadcasting for so many years. I would have to say that this is probably the most people I've ever seen during Christmas week listening into this broadcast. So thank you very much for your support. I appreciate everybody listening in. Despite as slow as it's probably going to be. I'm glad that you all are here. It dwindles down. I mean, I figured there would be a lot less people here this week, but listening in, and there's a lot of you guys that are here this week, and so and it'll dwindle down as we get towards uh, you know Christmas Eve, I'm sure. But yeah, once again, thank you all for your continued support and being here. Okay, let's take a look at let's see, we did the dollar yen. We're going to go over to the Canadian. So here's the Canadian. Now, I deleted everything on all these charts. If you're just coming in, you're like, oh man, where'd all those lines go? So longer term, this is the weekly chart of the Canadian. You can see about as much historical data as we've got here on these charts. There are a couple things that you should note. You have this big, massive cup and handle pattern. Boom, boom, right? That cup and handle pattern points to about right here, just so you all know. Doesn't mean we're going to go there today, and it doesn't mean we're even going to go there this year. This is a weekly chart, so you can see each year is about this much time. So, I mean, I'm talking the next couple of years, we could be, up towards 155, 158, okay, somewhere in that neighborhood. We're at 140 right now. Currently, there's a big flag, as you guys know, that points to 142, that flag pattern, basically right there, which I'll actually draw out on the charts because I'm just doing a freehand right now. But if you go over to the daily chart, we've had this big flag that we've talked about forever and a day. Looks like this. Right? And then you go copy, paste. We've been following this chart pattern for quite some time. And that's why it still gets to about 140, 150. So before you run out and start fading the dollar Canadian, let it reach that objective first. If the dollar Canadian gets to 140, 150, 140, 160, 142 between now and the first of the year, I will either short the dollar Canadian or I'll start buying Canadian currency. So, the Aussie Canadian, New Zealand Canadian, maybe buy the Canadian yen. I don't know what I'm going to do, but I'm going to start buying Canadian currency once we reached that level. Okay? So, I know that what you want to do right now is, when the Canadian gets to 140, you want to short it. But crude is weak. And if you look at crude, we're not up 2.3%. Crude is actually at a brand new, fresh low right now. That's the front month contract. We were, I don't know if we're looking at February or March, if the whole market's looking at February or March right now, but right now, crude's down 1.2%. That's just a continuous contract, not rolling over yet. All right, so with crude continuing to hit new lows and new trend lows, you have to imagine that the dollar Canadian could very easily, still take out 140. I still think that there's some distance to be seen in the Canadian. All right. So with that being said, resistance for today is going to be 140 or 140. Okay, it's obviously key, but to me, it looks like we can break above it. And where support is, very easy to read. There's support. Here's resistance. Very easy. And what I would be doing is I'd be buying on dips, 138.50, and resistance at 140. And if we break through 140, you got to imagine that we're probably going to see extensions here. 140.40, 141, those are all very doable on the way up. Even today, I think we could reach 140.40 if we start to break out. This is where I think your opportunities are going to come are in the Canadian, because that's really been the currency that's been moving a lot. All right. I don't know if I'll write down 138.50 though today. I think I'm just going to write down the hourly supports down here at 139.10. It's 12, but you get the drift. Get my drift. 1.3910, 140, 40, 40. Okay. It's very bullish. Let's go over to the Kiwi. Now the Kiwi has been really strong, but I'm going to tell you guys, this is here. Let's go to let's go longer term really quick. Right. So the Kiwi has been holding up really well. To me, this doesn't look like it's a bottom's being formed. This, to me, looks like we're consolidating, ready for a continuation, frankly. The 618 has been holding, but like I said, I think what is actually happening here in the Canadian, or the Kiwi rather, something that looks like this, which is more of just a continuation, in my opinion, whenever we decide to start. Now, if you go over to the daily chart, actually, let's go over to the 4-hour. This is going to be important for near term. Right here. Very important support near term. That means 67 cents. If we dip to that, that's probably not a bad place to be on the long side. On a slow day like right now, on a slow holiday session, if you can dip down to here to 67 cents, probably not a bad place to be on the long side. Okay. Now, obviously, if we break 67 cents, you got to be worried. And if we break 67.80, then the Kiwi becomes instantly bearish. But like I said, it's pretty slow. I don't know if we're gonna be able to do that. High to low, 618, 67.75. Right. All really key resistance through here. 67.75. And we are in a range. Let's go over to the Aussie dollar. Okay, so here's the Aussie. Longer term in the Aussie, we have this, again, we're just consolidating right near our lows. I mean, if you look at that and you go, oh, that's bullish, I would beg to differ. Okay. I don't know, looking at this weekly chart, what you see about being bullish at this point. To me, we're just barely skating across the bottoms. And that's very much, in my opinion, a continuation pattern. It's just a matter of time. All right. Now, going out to the daily chart, looks like this. And when I say a matter of time, it's only a matter of time before we break lower, in my opinion. And we're not too far off of this support, and this support is going to be really critical on the way back down. It's basically 70.70. But this low is obviously holding us up, and that's at 71 cents. For today, I mean, if you can dip down to 71 cents, probably not a bad place to be on the long side. I said, I don't know if there's going to be a catalyst to drive us below that support today, necessarily. But, you know, that would probably be a good place to be on the long side. Okay? Resistance, I guess you just write the spike high down here at 72 cents, right? And we're in a range. All right, let's go take a look at the dollar index. So the dollar index, okay. So I just removed everything off the dollar. Okay, there's the dollar, and you know, as of right now, obviously, we have a what could be considered a double top, but I view it the same way as the euro. I think what's happening here is you're seeing a consolidation or what could be a bullish wedge pattern. Just like the euro, which could be a bearish wedge, the dollar index could very easily be a bullish wedge. Here's your daily chart. Not a whole lot to do here. Hmm. So that means that's obviously really good resistance right here. Comes in at 99.35. And support, I mean, okay. I guess we just write down this, you see a spike through here, through these lows. It comes in at 98.59, 58. So 98, we can call it like 98.60. Okay. I mean, we're not too far off of that, so maybe we break through it, press some of the support. Who knows? Yeah, I mean, we're just monitoring that support right here. Okay, let's take a look at the peso. Now, the Bank of Mexico raised rates on Friday, and the U.S. dollar Mexican peso fell. It fell following the rate decision, and then just bounced back. Okay. If you go over the daily chart, people try to convince you this chart's bearish, but we're just basically going straight up here. Okay. Okay, really strong chart, and we hit a new trend high, and then gave us a little false breakout, but still holding up pretty well. Here's a 4 hour. I just don't know if there's a whole lot to do right at this very moment. I think it's kind of like this, but I don't think there's anything to do with the U.S. dollar, Mexican peso at the moment. Really don't. Let's take a look at the Norwegian krona. Obviously, with crude oil so weak, that the U.S. dollar Norwegian krona just continues to scream higher. I mean, I'm assuming we're in some sort of ascending wedge here, but I don't want to stand in front of it without seeing it reverse. You know, I mean, just looking at it, it's like I'm assuming we're in some sort of ascending wedge, but there's no reason to stand in front of this chart at the moment. It just continues to grind higher. Like the pain trade is obviously higher. People continue to stand in front of it and get rolled over. Okay. Um, Here's a Swedish krona. Swedish krona is obviously still very bullish as well. I mean, but there's nothing really to do while we're in this flag. I would buy it any dip if we can get down here, but the dips have been very minimal for the U.S. dollar Swedish krona. Really has. Um, yeah, I mean, looking at that chart, it's like, what do you do at the moment? There's not a whole lot to do here. I mean, you want to be able to buy it on a dip, but we're not even at any areas that look relatively attractive. Last week, all week, we marked up the 860 to 840 level, right? 840 to 860 all week, and we got one dip down to 840 very briefly, and then bounce right back up. And so I think you just have to take advantage of dips like that if you can get it. And we're far enough away where I don't think we're going to get to it today necessarily. All right, so there's your. I guess I mean this is your bias chart for today. So there you go. All right, then when I get back from break, what we'll do is we've got some comments that have come in. A couple of you guys are asking to look at some of the exotics. We have, like I said, no data coming out today. We have European